morning, everyone. Happy June and happy Tuesday. Today is June 1st, 2021. So happy to see you all today. Welcome you joining today's class, How the Pandemic Affect the Mortgage Industry. I'm Pauline Lam from Co-Time Realty, your 2021 Co-Chair, Education Committee, West and Gabriel Valley Realtors. A friendly reminder, all participants will be muted, and should you have any questions, please enter it into the chat box. Speaker will answer your questions during the Q&A section. This session is being recorded and will be available on the YouTube channel, West and Gabriel Valley Realtors. Now, I'm so glad to invite our committee member, Narita Gonzalez, to introduce our today's special speaker, well-known Mr. Kevin Young. Narita, the floor is yours.
Good morning, everyone. I hope you all had a fun and safe Memorial Day holiday weekend. I'm here to introduce Kevin Yang from CTBC Bank Corp. Well, Kevin has been the top residential loan officer in CTBC Bank for the past 10 years with accumulated total production over $500 million. Kevin also has more than 14 years of retail banking experience. Clients choose to work with Kevin for his extensive knowledge in the mortgage industry, as well as his ability to close each deal simultaneously. Kevin is a semi-professional cyclist. He always brings this energy, integrity, and creative service to every detail of real estate transaction. Kevin, the floor is yours to discuss how the pandemic has affected the mortgage industry. Thank you.
Oh, hi, everyone. I'm on speaker, right? You guys can hear me?
Yes.
Yeah, so hi, everyone. I'm Kevin from CTBC Bank. I'm not new to this. I've been here for 4 years with this organization. Wonderful organization. Thank you, Pauline, for inviting me. Last year was a special year, was a crazy year. It's this pandemic, this COVID-19, nobody ever thought it's going to be this long. And it definitely affect all of us. My mother is a nurse. She's on the front line, and she's the first people last year, December, already get the vaccine. We respect people who fight from the front line. The doctor, the nurse, the firefighter, the cops, the people who work for Costco, ones, Chinese supermarket, they are the people who work from front line. But actually, I think you guys, the realtors, the mortgage officers, escrow officers, title officers, inspectors, appraisers, people who do termite, we are also the people who work on the front line. As Chinese saying, money is water. You have to keep turning the water, to keep turning the money to make the water stay. We are the people who really worked on front line. We are the people who help the customer to get their dream house, to move in their dream place. We are the people turn around the economy. Now the real estate market, especially in Southern California, is booming. We should give us around the clouds. We are the people who really fight for it. We deserve this. I know a lot of agents, and I have coworkers, and I know several appraisers during this time because they keep going out. Unfortunately, they got the COVID-19. But that's our life. We chose this path. We go and we fight for it. I'm going to go direct to the point today. How the pandemic changed the whole industry. Before COVID-19, the bank, I give you a very simple example. Every time when the bank do a loan, the first thing we have to do, of course, is appraisal. The bank need to know how much the house is worth. But now, because COVID-19, a lot of banks chose what we call drive-by appraisal, which means the appraiser will drive a car, go around your house, go out to the seller's house, but without going inside. Going inside, they will depend on the pictures who are on MLS. So this is very important to all the realtors. When you guys do a listing, you have to protect the seller or to protect the buyer, less human contact. You have to take really nice pictures from the MLS in order for the bank to accept. I saw nice pictures, and I saw pictures with real estate agent taking the iPhone in front of the mirror so I can clearly say, oh, that's you inside. That's some picture we don't want. That's one very important change. You are the purchasing agent, but you are also the listing agent. When you are listing agent, make sure the picture taking a professional. This way, the appraiser does not need bother to go inside. They just need your pictures. From your pictures, they can determine the value. That's one very important change. Before COVID-19, that's not possible. The bank must go inside. The appraiser must go inside. But after COVID-19, we definitely allow the appraiser doing what we call drive-by. So because we want to protect the appraiser, we want to protect the seller, we want to protect everybody. Just less human contact. That's number one change. Number two change, I would say, we never have this kind of lower rate. I mean, I joined the bank. I started banking industry. I joined the banking industry in 2005. I went through the 2008 financial crisis. But even in 2008, we do not have a lower interest rate like today. Today, I use today as an example. 30 years fixed rate is only 2.625. That's really low. This low rate also encourage people who file really good W-2 income to do the tax, to apply the what we call full doc mortgage loan. Also, another change is the government changed the loan amount. When I start in 2005, the conforming loan, what we call small loan, the loan amount is $417. So imagine a client want to buy an $800,000 house, which is usually the beginner's house between 600 to 800. They need to get what we call a jumbo loan. But now, today, the conforming loan amount, it changed to 550. So if you buy a house for 700, you can simply get the lowest rate, the best rate with only $150,000 down. This also encourage people to buy a house. Last but not the least, I have been working at home for, well, since March, so about 14 months already. My coworker has been working from home. My assistant working from home. My whole team working from home. The only person in my bank go to bank is tellers. Like they have to go there because they have to collect cash, they have to balance, they have to do all those blah blah things. But everybody else is working from home. And this working from home thing had two changes. Number one, when you work from home, like Pauline was asking me earlier, what's the noise in the background? I said, oh yeah, that's my daughter who's doing Zoom class. So now she's finished, she goes out there. So a lot of people in the room starting thinking, oh, I need a place to do my Zoom. My daughter needed a place to do my Zoom. My wife was working in a place to do a Zoom. If you have two children, the two children doing Zoom. Everybody want to do their own Zoom thing in their own place. So certainly you found like, wow, my house is not big enough. So whoever has 2-bedroom wants 3-bedroom, 3-bedroom wants 4-bedroom. People who have 4-bedroom said, oh, I want a big yard because my children are not going to school. So they need a place to do their PE class, like in the backyard running around. So whoever had big yard said, oh, we need a swimming pool because summer is coming. Whoever has a swimming pool said, oh, we need a tennis court. At tennis court, they want a basketball court. Everybody's greedy. Everybody wants something up. So the housing market is going to up and up and up. Everybody wants something. And this pandemic, I have several clients who used work, who still working in West LA because a lot of engineers, they work in Santa Monica, they work in Playa Vista area. Before, they must live, I don't say they must, but before they prefer to live somewhere around West LA because the traffic is horrible. But now, their company, big company, I'm talking about big company, not small company, T-Mobile, Verizon, Google, the big company tells them, we think it's not going to going back. It's going to be work from home forever. So a lot of those clients who used to live or rent small place in West LA start thinking, oh, I mean, they are most Asian engineers. They were thinking, oh, the only reason I live in Hollywood is because I want to drive to Santa Monica in half an hour. But now I work from home. Why? I stay in this West Hollywood small apartment. Instead, I can pay $800,000 to buy a huge house in Corona, or 1.5 million. I'm going to Monrovia, Temple City. That's a trend. Like a lot of Asian going more back to the Asian area. So that's what I'm telling you. This booming housing market, which is really good for the banks, which is really good for the appraisers, but especially good for you guys, for the realtors, it's going to keep going up. That's what we are seeing. The client we have now is already a lot, I would say 50% are what we call relocating. Like they own a place or they are renting a place. They totally move to a new place, which is their dream place. For Asian client, that's the way our name is West San Gabriel Valley Realtors. For Asian client, most people want to live in this whole San Gabriel Valley. People ask me why. I said easy, food. The only reason, food. Yeah, you want to go somewhere you can easily enjoy Chinese, Korean, Japanese, Vietnamese food. And if you go in Hollywood, yes, they do, but not so much, not so easy to access. So now we are seeing the pandemic changed the whole situation. A lot of clients moving, I can tell them moving back because they used to grow up in San Gabriel Valley. The only reason they move out is because of work, because of traffic, because of distance. But now, since work from home, they are going back. That's a trend I also seeing. If you ask me, what is the disadvantage of the pandemic? I would say, number one, last year, a lot self-employed clients, a lot restaurant, hair salon, nail salon, all those clients, because the shutdown, it's not their problem, it's not their fault. Because the government shut down, they lost their income, they lost their client, and some even they lost their business. So for those clients to come back to their feet, to get a loan from the bank and to buy a house is incredibly hard. Especially some clients took the grant from the government. I know it's a good thing for you to take the grant, but the bank look at it differently. So they will check their records, they will check the credit, and it will affect their loan application. That's something what we call a disadvantage. During this whole pandemic, I can say the Asian community, I would say, is the one who got hit the latest. We have the latest people who got affected by COVID-19. I guess because the Asian are higher education, willing to get a vaccine and listen to the government, believe in the government. We prefer to stay at home. So our impact is, I would say, is the least compared with other race. So that's why San Gabriel Valley, with majority of the Chinese, Korean client live, the housing market is getting increased so much. Oh, another thing the pandemic is very interesting is a lot of people made money in the stock market or Bitcoin. I know this young guy who started Bitcoin with 100,000 and turned into $1 million. And he cashed out the whole $1 million for his dream house in Arcadia. He used to be a poor kid, but now he bought this $1 million house for his parents. A really good, really good American-born Chinese boy, really good. He's only 25 years old. But he told me one thing I always remember. He said, whoever made money on Bitcoin or whoever made money on stock market and stay there will lose eventually. The smart people are the people who make the money, cash out, come back, and buy a house. You can tell because the housing market, he said, he'd been born here, he said 25 years. He said he never saw what we call a housing market crash. Sometimes the price will go down, but there's no such thing like crash. The house will always come back. So this is like something interesting. He's not the only client. I saw several clients cash out the money, cash out the stock, and try put the money back into the real estate market, which what we call the hot money. There are a lot of hot money coming, which is really interesting. Before I used to get used to see the client bank statement from Chase, from Citibank, from Wells Fargo. Now I get used to see the client bank statement is from Charles Schwab, American Express, and Robinhood. A lot of people use Robinhood. Now the trends, people are saying me, oh, I have a Bitcoin in this statement. I'm like, oh, we had seeing this new trend of the new generation. The people who buy house are definitely getting younger and younger. Used to be majority are 40s, like between 40 years old to 50 years old. But now it's definitely changing to between 30 years old to 40 years old, or even between 25 to 30. The people who without a kid, without wife, without husband, I already start seeing buying $1 million house. This is a new trend we are seeing. I guess that's my topic for the pandemic. Later on I can introduce a little bit about my bank program. I do have a screen share for you guys. What I can explain to you is there are two kinds of loan. Basically, let me do the share screen. Let me do the two share screen. There are two kinds of loan in the whole mortgage industry. There are only two kinds. The one we call full doc and the one we call non-doc. Full doc is for people who file a really good tax return, W-2 or 1099, and willing to show the bank, oh, let me show you a bank statement. Let the bank check the bank statement. The advantage of full doc is definitely a lower down payment. It could be 20%, some banks even do 10%, and a lower interest rate. The disadvantage of full doc is, of course, because of full doc. So the bank will ask you for 2-year tax return, 2-year W-2, 2-year 1099, and 2 months bank statement, blah, 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 a lot, and because it's just a lot document. But that's good advantage and disadvantage. So I'm going to the non-doc. Non-doc is what Pauline asked me earlier, say, hey, in this special environment, because nowadays, when you want the seller to sell your house and you tell them, I want 45 days, I want 65 days escrow, they think you're stupid or crazy. Nobody do 45 days and 60 days escrow. A lot of cash buyer, if you are alone, you have to do 30 days escrow. With 30 days escrow, it put a lot of pressure on the bank, especially if, as I said, you do full doc loan. Because full doc loan is complicated. And it's not, some clients say, I already give you 2-year tax return, I already give you everything. But you have to understand, when you give me everything, the underwriter will look at them and they will bring more questions, ask more documents. Then you give me more documents, and from that document, they will have even more questions. So the full doc loan, I cannot say it's impossible, but it's incredibly hard to do what you want. 14 days loan contingency, 30 days closing. It's doable, but it's incredibly hard. For the non-doc loan, which means the bank do not check the tax return, do not check the W-2. It's very simple. It's only need their, oh, sorry, somebody asked a question, but I'm going to finish everything, then I'm going to answer a question because this will like change my way of thinking. So for the non-doc loan, it's pretty simple. There are two kinds, at least there. I can share, later I'm going to give the, you guys want to take a picture, go ahead. But later I'm going to give this flyer to Pauline. So whoever wants, she can distribute to you guys. So you don't need to really like jogging everything down. I just basically explain. We have two kinds of loan for non-doc. There's one we call asset-based. Asset-based, use simple English, it's for rich clients. Basically, the client want, the bank want you have 40% down payment. They want you have another 2-year reserve. They want you have a higher credit line, higher than 680. They only want a 1 month bank statement, and the maximum loan amount is $5 million. On last Friday, I just closed one house in Arcadia. The house price is $7.5 million. We give the client $3.5 million. Use this program, nothing to ask. We close within 35 days because it's just so easy. The client don't need to give a tax return, nothing. Just give us the document. I mean, just give the bank statement to show here you go. I have enough down payment and I have enough reserve. Then the bank give them the loan. The next one is what we call VOE program. What we do is we can do 35% down payment. We only want 1 year PITI. But this loan, the special part is employee only. I use Pauline as an example. She can do it because she's a realtor for Corp, but her boss cannot do it. The broker for Corp cannot do it because that guy, we want an employment letter for Pauline is going to be his boss writing, oh, I prove Pauline has been working here since blah, blah, blah. But he cannot write this letter for himself. That's why it's employee only, cannot be a self-employee. And this one, the maximum amount is 1.5 million. Both program, the turnaround time is less than 30 days. The fastest one I ever closed is I closed for this Jewish American dentist. He lives in Beverly Hills. He bought a house in Malibu for 5.5 million. We give him a loan for 3 million. We close in 22 days. That's a record, like 22 days for 2.2 million. Sorry, for a $3 million loan with 2 appraisals. It's incredibly fast. This program is the easiest program for you guys to get your client. I mean, especially a lot of Asian clients who retire or who are self-employed. They don't want, for any reason, they don't want or they are not willing to show the bank the tax return. This is really, really good program for them to go, because this one is not so much down payment, and with and the number one selling point is fast closing. We close fast is what this market is seller want. I guess, Pauline, I guess that's it. That's all of my things today. I can start to answer the question now. Let me see.
Okay. Well, I think you've answered. I think you've answered the first question here. There was a question here regarding turnaround time. Maybe you can go into more detail about the non-doc. What is the turnaround time, interest rate, and term for assets-based loan?
Yes, I think the second question is what the interest rate? For interest rate for the asset-based loan, the bank has several programs. Basically, 1 year fix, 3 year fix, 5 year fix, 7 year fix, 9 year fix. I don't want to spend time on this. Most, I would say 99% client pick 3 year fix for 3 reasons. Number one, a lot of people, after they closing the loan, they would stay 1 year or even less than a year to start doing refinance. That's why they pick 3 years. Number two, a lot of clients within 3 years just pay off already. And number three, 3 years is the lowest one. I mean, the 3 years rate is 4%. The 5 year rate is going to be 4.25. The 7 years rate is going to be 4.5. A quarter percent keep lower. That's why most people pick the 3 years, 4%. That's the easiest one. So let me go one by one. So the next question is.
Next question is, does the WVOE need to be from a U.S. company?
Definitely, and not only a U.S. company, it has to be a Southern California company, because you are buying a house in let's say San Gabriel. How can you work in China or Korea or New York? So your company has to make sense, like somewhere local. It cannot even be San Diego if you buy a house in San Gabriel. It doesn't make sense. How can you drive from San Diego to San Diego every day? It has to be local. The company has to make sense.
There's another question regarding at one point at the beginning of the conversation, you were discussing the drive-by appraisal versus the appraisal and how it changed the industry. So what does a drive-by appraiser look at that and a regular appraisal wouldn't look at? Like, could you talk a little bit about the difference?
I would say this is something really new. I would say the drive-by appraisal really, a lot of people told me, oh, well, this affect the value. Like, for example, my house in Arcadia, it could be, I think it's 2 million, but if you do drive-by, maybe it's only 1.8 million because your guy did not see inside. That's why at the very beginning I say, the key point is not even the seller, it's not even the appraiser, it's you guys. You guys are the people who take the pictures. I mean, not you personally, but don't take a random picture. Don't like use an iPhone to take a picture. Spend some money, use a, what do you call, the photographer, the professional people to take the picture. Because inside, the appraiser will have 2 ways. Number one, they look at your picture, they like it. If they don't like the picture, what they're going to do is they're going to FaceTime the seller or the listing agent, go around the house. They will ask you, say, hey, can you move up? And the listing agent move the cell phone up. Or can you go down? Can you go to the kitchen? Can you open the door? That's how they do. But I would say if you take a really nice picture, like I use an example, I just closed one in Malibu. The house is 5.5 million. We did 2 drive-by, not going inside, because the listing agent did a really good job on the photos, like a lot of photos, and take really nice photos. So I would say this is even better because sometimes for appraiser, they go inside, they found out, oh, on the countertop, actually there's a crack. But because the photo is so nice, they don't even know there's a crack. It looks so nice. So I would say drive-by appraisal will not affect the value only if has really nice pictures on the website, on the MLS or Redfin or whatever the website you are using. Yeah, they ask the same thing about traditional appraisal, but the inside they depend on the leasing agent. Yeah.
So they look at the same items, just there's a difference in whether they go in person and see versus they are actually looking at pictures.
So far, I didn't see anybody who complained, say, hey, I think because you did a drive-by, that's why value came low. Nobody. We had done almost 100, but nobody ever asked this. Yeah.
So what is the process is the process different for a drive-by appraisal?
Oh, it's the same. The only difference is as a listing agent, you usually receive a phone call, say, hey, my name is Kevin, I'm the appraiser. I come here Thursday? You won't receive the phone anymore. They just did it without your knowing, except unless your listing is in a condo or, in some place had the gate. They do need your help to get inside the gate because the password. Otherwise, they won't even call you. Yeah.
What about the appeal process if the appraisal does come in low? Because that is a big thing today.
Very good question.
Crazy.
For drive-by appraisal, the only way to appeal is go inside.
Okay.
Yeah. Yes, we do. We do have one. Like the listing agent said, nah, this is too low, blah blah blah. So we said, just nothing we can do, but go inside, redo it. You pay, like the buyer has to pay actual money for the appraiser to go inside. So in that case, it's still low, but increase a little bit in that particular case. Yeah.
So we have some more questions for you. Do you also handle investment property loan, commercial loan? Can you explain the application process?
The investment property loan, if it's for residential, it's the same thing. But if it's for commercial, I do not handle it. My bank does it. Yeah.
So would you refer them?
Yeah.
So would you refer them to someone in the bank?
Yeah. Yes. Our partner. Yeah. He does commercial loan. But commercial loan.
I'm sorry. Go ahead. I'm sorry.
I just had a meeting with my partner because we are doing a case. A client buying a house in Arcadia, also buying 6 units in USC. Not in USC, next to USC. We talking about this. Now the bank, we want something like 6 units, 8 units apartment. Like it's commercial but residential. So because nowadays, because we work from home thing, we prefer not to do loan for office building. Yes, because we think there are less people rent the office building. We want commercial loan, but we want something like a doctor office, a pharmacy, or a 6-unit apartment, something like that. Not office building. Office building is not popular. We think there are so many for sale for lease. That's something very interesting. Yeah, because of the pandemic. Yeah, in the commercial side.
Do you still handle foreigner loans?
Yes, we do. For foreigner loan is also something affected by the pandemic because in my bank, most of our foreign clients come from 2 countries, China and Korea. And for the last year, because of almost the US and China, Korea, the international flight is stopped. So not so many clients come here. But recently, a lot Chinese Korean clients come here, the rich ones. For the realtor, you guys can pay attention because they come here to get a vaccine. They pay the money to get the vaccine. They are rich ones. So they will come here, they will open an account, get a vaccine. A lot of them going to buy a house. Yeah, we still do it. We still have the foreign national loan. It's a pretty simple loan. For the next question, do we do out of state loan? Yes and no. For my bank, we only do New York, New Jersey, California, and Hawaii, because we only have branches in these four places. So we don't do Las Vegas, we don't do Arizona. No, we only do New York, New Jersey, Hawaii, California.
There's another question. How do you consider real estate agent self-employment down payment percentage? What I mean is real estate agent is the buyer himself. So if a real estate agent was purchasing property, how do you consider them as far as the percentage for down payment?
Oh, if for the real, I did a lot of loans for real estate agent. You guys have two options. Option one, of course, is full doc loan. For full doc loan, we will use just use this month as example. We will use your 2019, 2020, 1, 2, 3, 4, 5. So that's 24. We will use 29 months income. So 12 months plus 12 months plus 5 months this year. So 12 plus 12 plus 5, 29 months income combined together, then divide by 29. So that's your income. That's your monthly income. If you do what you call full doc loan, that's how the bank calculate 2 years plus up to today. If you do non-doc loan, we will consider you if you are not a broker. Has to be not a broker. That's why I use Pauline example. You are not the owner of Guotai. You are only the real estate of Guotai. We consider you as an employee, not an employer. I guess that's the question. I mean, just answer.
Yeah, it looks like it. Does anybody else have any more questions? I think we answered all the questions. We'll give you a few more minutes to ask any more questions you may have. I think you were hitting something that was pretty interesting early when you were discussing about office buildings and the bank, your bank is really not, CTBC is not interested that much in office buildings because of COVID. Could you explain a little more about what
the reasons, like, because a lot, we see a lot of office building for lease, a lot for lease. Mm-hmm. So we are afraid as, I'm talking, sorry, I'm take it back. There are two kinds of purchases. If you're buying a one, it's fully leased. Like, for example, West San Gabriel Valley Realtor, you already read one office. Guotai rent another office. There's a Bank of America, another office. It's fully leased. We are okay because you already have leased. You just buying this one. You become the new landlord. This one, we are okay. We are the one we don't like is you buy an empty office building as a landlord. The bank will be really afraid, like, who will rent your building? Because a lot of people work from home now. That's the thing we are afraid. Mm-hmm. Yeah, it's different from what I said. When you buy a 6-unit apartment, the client I mentioned, he bought a 6-unit apartment in USA. It's brand new. And nobody rent there. It's brand new. It's brand new. But we still like it because we believe you will rent this 6 units in a very short amount of time. Mm-hmm. Because it's residential. So that's the difference.
Now I have a question about appraisal. This is my question. How are the appraisals coming back on those office buildings? Is that the reason why the bank's not that interested, because it's not appraising that well? How is that working?
Yeah, it's not appraising well. Yes.
Okay. Yeah. And there's another question. Does it take longer time to process the application lately? I don't know if that's about the real estate or in general, a loan application. Maybe you could answer the question for both.
I would say, okay, I use myself as example. Last year, May, I'll give you 3 time period. Before pandemic, I usually close between 10 to 12 loan amounts. During pandemic, last year, April and May, I believe I closed 3 loans per month. I had nothing to do. I bike every day, like I bike 55 miles every day because I had nothing to do. But in May, last month in May, I closed 16 loans, 14 million in one single month. My assistant, me, my whole team, like, it's just so busy. We have clients from all over, from foreigner, from local, from out of state, trying to buy California, from people who do 1031 exchanges. So because the housing market is booming, so we have so many applications. So that's why I guess it makes sense, because we have the same amount of employee. If you have more application, definitely your processing time is getting longer.
Mm-hmm. Mm-hmm.
Yeah.
There's another question. What do you foresee the interest for the remaining year, especially after mid-June or September?
I would say the best rate time is already passed. As I would say, last year November between this year February, that's the best interest rate that I saw. I have 30 years locked at 2.375. 30 years 2.375. That I think that part is gone. The rate's coming back, but be aware. However, a lot of people say, it's higher now. No, when you say it's higher now, when you use the word higher, you are compare higher with the lowest point. You are not compare the rate with before the pandemic. If you compare the rate with before the pandemic, the rate is still lower. So I would say the rate is getting higher and higher, but it's going to still be lower than the rate before the pandemic. But if the question is talking about non-doc, which means do not check tax return, the rate will stay for a while because that rate doesn't depend on the government, it depends on the bank himself. The banks like my bank, like East West Bank, like Cassie Bank, the three major Asian banks in the San Gabriel Valley, the interest rate is almost all between 4 to 4.25%. That rate will, I would say, will stay until end of the year, because that rate didn't depend on the market. It's depend on the CD rate. So if you open the newspaper, like any kind of newspaper, Chinese newspaper or Korean newspaper, you look at the bank and say, oh, there's a CD promotion. We are going to do 1 year CD or 2 year CD for 1.5%. When you see things like that, you know, oh, the loan rate is going to go high. But now you don't see the kind of commercial. And then when you open, the CD rate is 0.5%. It's so low. So that's why I tell clients, don't do CD, just buy house. Yeah. Can you share some?
Can you share some thought in the bank's action will be taken if the borrower has the forbearance record since last April during the pandemic period?
For the forbearance, a lot of clients have the forbearance record for during that period. So the bank will look at it differently. There are two kinds of clients. There's one client who I use your restaurants, for example. A lot of clients take forbearance because they're a restaurant. But now, June 15th, the whole California will reopen. The restaurant business are actually really good. They are making a lot of money because everybody's going to go out. I just went out with my wife yesterday. We spend a lot of money on the restaurant. We give a lot of tips to the people because we feel bad for them. So things like that, we'll think, oh, this forbearance is really for your hard time only. And the hard time is gone. You are coming back and you are booming, your business is better. This one is a bank like. The bank don't like is people who take advantage of the program. They have no use for the forbearance, but they take the forbearance. So that's the client we're like, wow, so you don't need it, but you just take advantage of it. That's one we don't like. And probably bank will maybe reject their loan, or maybe we'll give them the loan, but with a lower percentage. For example, let's say they qualify for 70%, but the bank say, oh, let's protect our bank, get lower risk, let's do 50%, something like that.
Does CTBC they have an expectation of how many people are actually not going to make it out of forbearance and end up having to go a different route?
I don't have the official number, but if I have, I cannot share with you. But we do have client last year applied for forbearance, but some of my clients, from what I know, almost all my clients already paid back, like already back on their feet. Yes. Yeah.
So we it's looking positive. So it's looking really positive.
Yes. Several of my clients did 6 months. Of course, what my bank we do 6 months of forbearance. So let's say you, Pauline, for example. Oh, we give you forbearance from January to June, 6 months. Then in June, Pauline will say, oh, I still have a hard time. We will say, okay, we approve you another 6 months. That's what I do. That's what my bank did. But in my bank, so far, on every single my client who did forbearance only went the 1 period, which means They only did 6 months. They did not ask for extension for 6 months. They back on the feet already. Yeah.
There's another one. How do you suggest for a friend's daughter newly grad? Oh, hold on, I want to start this. If the borrower with the EDD paycheck record, will this affect their new loan process with your bank?
Yes and no. Like we all say what's the EDD for? For example, if some girls, some lady get pregnant, they got EDD. Or some people who I have a client, her husband passed away because of COVID-19. So she took time off and she applied for EDD. You had to, the EDD had a back, people say, oh, EDD. No, there's a background, like why you get the EDD. Are you still on EDD? There's a reason. The bank will ask for the reason. And if the reason is reasonable, it does not affect the loan. The next question is, friend, daughter, newly graduated. Yes, I have a perfect example. I'm doing a loan now. A young guy graduate from UCLA, had his first month paycheck. His parents gave him 100% gift for the down payment, bought a condo. I mean, it's a condo, but it's $1 million condo in Santa Monica. He got himself a loan for $400,000. It's a full dog, doable. For the bank, only need the first month's paycheck plus the college diploma. So basically prove this guy, he graduated from UCLA in last year, December. So he started working in February. Makes sense. Like he takes 2 months and he started you cannot be, I graduated from the college 5 years ago. And during the 5 years, I decided to try all the work. The bank doesn't buy the story. The period in between should be 6 months to a year, but it's doable. I think this question is, she doesn't have a credit score yet. Again, same thing like the client I just mentioned. I didn't finish. The young guy, you are talking about, you have to understand, there are two kinds of situations: bad credit or no credit. If it's bad credit, it's not doable. Bank do not like bad credit. But you talk about no credit, the bank can still do the loan. It just add 2 things. Number one, your rate is going to be higher than the people who had good credit. Number 2, to protect the bank will ask you for a reserve money in the bank. In case you cannot pay, the reserve can be paid. But it's still doable. Yeah.
Like how much reserve? About how much reserve?
It depends on the underwriter. Most underwriter is a year at least. Some underwriter will say 2 years, 3 years, 4. The highest one I saw is 5 years. Yeah, I can't tell you the number. It really depends on this case. Like how big is the loan? How about what's her income? Where's her down payment come from? It's like a whole picture. Yeah.
How about equity trading income of an equity investor? That's his main source of income. Does this income qualify for a mortgage?
You mean he buy stock?
It says equity trading income.
Like, but what do you mean by equity trade? Like he sell house? Like he flip house?
The main source of income does. Well, it says this is main source of income, so I'm assuming it's stock. Probably someone who does.
If it's stock, we need instead 2-year tax return, we want to see 3-year tax return. We want to see this guy, like how because I have a client who just only do stock. We want to see the 3-year tax return. We want to see how he make his money. Does he make money keep going up or stable or up and down? If it's going up, good. Stable, good. 1 year up, 1 year down, no good. Yeah, not a roller coaster. Yeah, that's what we call. We don't want a roller coaster. We want going up or we want stable. We don't want this like heartbeat. No. Yeah, it's still doable because as I said, the new trends, some young guy and don't have a job. I mean, their job just trade. It still make money. It has good income, file tax return. Then it's doable. Yeah, it's same thing like flip house. It's the same thing. If a client had flipped 2 houses in 2019, and 4 house in 2020 is good because he's doing more, not less. The other way around, if he does 4 house in 19, 2 house in 2020, it's not good. Yeah. Basically, just think this way. When you hang out with somebody, you want to hang out with a person who is positive. The bank want to hang out with people who are positive and uptrend. Not only my bank, every single bank is like that. So
does anybody have any more questions? I think that's it here. Thank you, Kevin. That was amazing.
Yeah.
That was amazing.
Okay, last call. Do you still have any question or you want to talk? You want to use a speakerphone? We can ask Fang to unmute you. Today is very special. Kevin, give us a bunch of Q&A time, right? I feel so exciting for that. So do we have any more questions? No more. And Kevin, do you have anything want to do a conclusion to share with us? How do you encourage us?
I would say, as I keep saying, a lot of you guys had more experience than me. I joined the banking industry 2005. I joined Citibank Arcadia. Then later on, I worked for HSBC. Then later on, I worked for CTBC. I worked for 3 banks for 16 years. Within the 16 years, I never saw housing market like today, and not even once. So the people who ask for, I mean, as a listing agent is really good, but as a purchase agent, you really have to work with your buyer. Like there are listing agents do not want any kind of contingency, no loan contingency, no appraisal contingency. So you cannot gamble with your client's money, especially if you want to do a loan. So you have to really prepare your client. Not that doesn't have to be me. Bring your client to a local bank. Say, hey, this is my client. His name is John. Can he qualify? Blah blah. Let the bank do a whole picture. Say, hey, I think John will qualify if he buy something. So you know the real truth for your client. Then make the offer. Do not just listen to your client. Say, do not worry about my loan. My loan be okay. No, I saw so many cases. When they start escrow, they say, oh, Kevin, we don't have loan contingency. And I run the client credit. Oh, really bad. Nothing we can do. Oh, this guy doesn't have enough down payment. This is really like, you have to be prepared. Like always get your client prepared. If your client is fully prepared, like I would say, I keep mentioning there's a loan I did 22 days closed with a Caucasian agent, a Jewish client, but the seller is also Caucasian. I would say the agent did a really, really good job. He brought the client to my bank a month ago. We prepared everything. We prepared 3 scenarios. What happens in 1031 exchange? What happens if the house is higher? What happens if lower? And he prepared everything. When he opened escrow, boom, the first day we start the loan. The second day the loan approved because we already prepared that scenario. He did a very good homework. So if you guys really want to do shorter escrow period, shorter loan contingency period, or no contingency period, get ready before start. And this is really good time. Go ahead, make some money for you and for your client. Yeah.
So it looks like there are 2 more questions here before we wrap it up. Thank you so much, Kevin, for gracefully answering all our questions. We really appreciate you. Is there any minimum credit score to qualify the real estate loan, and also if the buyer has a good job now?
The minimum credit score for every single bank is a little bit different. Some bank, I use KC for example. I know KC very well. Their minimum 700. For my bank, 680. So there's no minimum for like the banking industry per se, but every single bank has a different one. We do 680, but because we are like what we call portfolio loan, which means the bank owns their own loan. So let's say if the client is 675, are we going to reject it? No, I use that UCLA guy, for example. That guy has no credit. So if it's not a bad credit, bank will increase the rate, increase the reserve, still do the loan. If it's not bad credit. Yeah, but by bad credit means some credit lower than 600. That's not, so don't even think about it. That means you did something really horrible. That's why you get 560. Yeah.
Two more questions. Do you help provide DUs even when there's not a subject property? And could you discuss a little bit about normal 20 down or 30%?
Oh, normal 20 down. I mentioned earlier, normal 20 down. The best rate I ever saw is 2.375. If I just look at, I worked one. I usually turn on my computer in the morning. The rate will pop out today. Today is 2.75. Today, but be careful. The rate. Don't even remember today because only today. Yeah, tomorrow, I don't know the rate tomorrow. It's Fannie Mae, change every day. Yeah. For the
DU.
For the DU, yes and no. Yes, we used to do. Why not? Why no now? Because as I mentioned, the housing market is booming. Like we have too many applications. We don't have enough human resource to just do, because DU is basically kind of a prospect. They are not real clients, but they spend a lot of time for our bank, so not anymore. I would say, so far, Chase, Wells Fargo, I'm not sure BOA, and Citibank, these three banks still do DU because they still have, they're the top 4 banks. They still have enough human power. Not for the Asian bank. Every bank is just too busy. Yeah.
One last question. Yeah, what is the minimum down payment for an investment property?
If we talk about going backward. If we talk about full doc, like which means show tax return, it's going to be 30% down payment. If we're talking about non-doc, which means do not show tax return, it's going to be 40%.
Before we do a final thank you to you, we feel so exciting. I still have one last question for, I think many of you want to invite Kevin. How do you think, although the interest keep low, right? And the market value is going up, jump up, is extremely high. Do you foresee anywhere, or how do you think the short sale and foreclosure should come out, or how do you think? Not coming yet.
I don't, actually, later I said, we have no person, I mean, so far everybody who did forbearance in my bank, in my client, paid back. Number 2, we don't see, since our bank started doing this loan in 2009, because we are from Taiwan. We came to US in 1989. We started doing mortgage in 2009. Since 2009 to today, we did thousands loans. We have zero foreclosure. Yeah, we have 1 short sale, 0 foreclosure. I would say the same thing. I don't want to say good thing about East West Bank and Cassie Bank because they are my competition, but I still have to say good thing about them. Both East West, Cassie, and CTBC, the 3 typical Asian banks, because the down payment is 40%, 35%, so their portfolio is really healthy, especially the San Gabriel Valley. I don't foresee any foreclosure here. That's why we call West San Gabriel Valley Association. From the West San Gabriel Valley all the way to Diamond Bar. You guys are agents. Do you guys ever see a foreclosure sign? I mean, barely now. Yeah, I don't think there will be happens very, very soon. And a lot of buyers, especially a lot of buyers say, "Oh, I heard from my friend, this house is going to be crushed." I'm like, "Oh my God, I heard the same thing like 15 years ago." Whoever keep talking about the Southern California market is going down did not make money. Did not make money. Like people in Hong Kong said, we always calling getting on the boat. The earlier buying on the house is the earlier on the boat. You don't want to be the person who are the last person say, "Oh, everybody on the boat," and go far to the ocean. And you are the person going, "let me swim to the boat." You don't want to be that. You want to say, like you want to be the person get on the boat and go as early as possible. Yeah. And I know a lot of agents, a lot of clients don't believe us because they say, "Oh, you only see that because you want to sell the house." But that's not, the truth is just this housing market. My wife is American born Chinese. She has been grew up here 35 years. since she was born, she grew up in St. Gabriel. Her house in St. Gabriel. She said, 35 years. I never see. I only see the house going up and up and up and up. They bought their house in 1955 for parents bought for $150,000. 150, because they are North St. Gabriel with the San Marino School District. So when they sell the house, they sell it for 1.5 million. So, so I don't know what to say. Right? I just wish I have a time machine to go back and to buy my house. Yeah. So I don't.
So wonderful. I think you today you share with so many good and powerful and positive information, and we definitely have many takeaway today, right? And I want to thank Narita and Kevin. You both give us very wonderful time for this 1 hour, and I would say we should be play a leading roles in our industry, not only for realtors, and we need specialize, especially for Kevin. I saw Judy, Amy, a lot of loan broker here today to support our class. And then we appreciate for how we can well prepare to help our clients for ourselves for the new purchase or investment property successful. And thank you so much for your expertise in your lending industry, and we benefit. On behalf of West San Gabriel Valley Realtors, we sincerely want to thank your valuable time and your wonderful presentation to us. We want to see you in person in West San Gabriel Valley Realtors Auditorium pretty soon. And a quick reminder for next Tuesday, don't go away yet, okay? 12 noon, we have a new topic, new speaker just confirmed by Mr. Wei Ming Lee, and Kevin invites you also come. Mr. Lee is an ADU expert, and he will bring us a topic. I think nobody will talk it. Plant and grow rich through the marijuana house abatements. Buy marijuana house, how to improve it and tear down and present to be a new house to make money in the market, and don't miss out this great topic. No recording next Tuesday, 12. Don't eat your lunch, coming together, okay? And for the third Tuesday is what's new in the industry. Sage Gomez, my NHD, will give us new information about NHD disclosure. And June 22nd, 12 noon, YPN education classes will show us a social media panel. But another one is very important. June 23rd, 1 day pay class, short sale and foreclosure. Okay, that's what you have to come to join and learn. This is certified by NAR member, only charge $59, November 79. Refreshers is $25 only. I wish to thank you so much. Kevin, you bring us a beautiful tune. It's a great starting, and we're looking forward to reopen, and we're looking forward to all you guys in our board soon. Thank you. Thank you, Kevin, Narita, and all of you.